You've worked hard for your family's future, but what if there was a way to maximize wealth for your kids for after you're gone, setting them up for success with your planning now? There are three ways to make sure that we are being a good shepherd of wealth now, including our kids and our planning, to make sure that they get the most possible and pay the least amount in taxes possible. The first is going to be creating an estate plan that transitions real estate that you own during your lifetime to your kids in an efficient way to allow them to sell it without capital gains treatment after you pass away. The most efficient way to do that is through trust-based estate planning. We move your real estate into the name of your trust that you control for the rest of your life. Then at your death, the cost basis in that property gets adjusted upward to whatever that property is worth on the date of your death. When the kids go to sell it, they're able to sell it without paying capital gains tax, as long as they sell it for what it's worth. The second is going to be strategic gifting during your lifetime. If your kids have an earned income, if they make at least $7,000 a year, you can gift money into a Roth IRA for their benefit. The Roth contribution cannot exceed the amount of income that they make in that year, but any money that you give would be under the annual gift exemption and will grow for them tax-free over the rest of their working lives. So when they go to retire, it will be worth hundreds of thousands, maybe millions of dollars. Roths are a tax advantage growth tool. So the investments in the Roth are going to grow without any capital gains consequences. And when they withdraw that money in retirement, they don't pay tax on it then either. The third way to maximize wealth for your kids after you're gone is to create a dynasty trust. Maybe it's the same trust we created for the first way, maximizing the real estate value and eliminating taxation on the sale proceeds. But this time, we're providing your kids with all income generated from your estate assets and discretionary principal distributions to invest in things like real estate or in businesses, or to just take care of money shortfalls if they run into some issues, but then also provide them with ongoing, at least quarterly income distributions from the trust. That can supplement their income, can add to their investments, and make sure that they're set up for success after you've passed away. It's time to take control of your legacy. Click the link below to start the process.